Addus HomeCare. I believe it fits into both the compounder and close the discount category. A compounder because it's been growing earnings and cash flow, and close the discount because there are some misconceived risk in the marketplace that has made their stock price really attractive at current levels. They've actually grown their earnings, as you can see on the chart at the bottom, almost doubled their earnings over the last 5 years. However, the stock price hasn't really done much. It was trading around $100 back in early 2020, around the time of the first outbreak of COVID. And right now it's trading at about $115. So we see this as a very attractive opportunity to invest in this great compounder. So what does Addus HomeCare do? Basically, they started as a cleaning services business in Chicago back in 1979. They gradually expanded into senior care and then expanded beyond Chicago and beyond the state of Illinois to look for other markets outside that state. The current management team, which is basically the CEO and CFO and some of their other senior executives, have been together since 2016, and they've demonstrated a clear track record of growing earnings and cash flow. Broadly, Addus's home care business can be divided into three categories or three services. They provide personal care services, which is the largest segment of their business, assessed with activities of daily living for senior citizens. The next business is hospice, which is basically end-of-life care where people come, on average, they have less than 6 months of life left, and they basically come to an Addus make sure that they're able to live last few months as comfortably as possible. And lastly, the home health services, where they offer skilled nursing or rehabilitation services. So as I said, Addus has today services in about 23 states, serving a population of patients of about almost 50,000 patients today. So why do we like Addus and its industry? We believe there are attractive organic growth opportunities in the industry, partly due to the fact that there is an aging population in the US. The other thing driving growth for them is a focus on healthcare cost. We saw the recent introduction of the Big and Beautiful bill by the US administration, which is very focused on cutting costs for Medicaid and Medicare. And I believe Addus plays into that in terms of they're able to provide services at a very reasonable cost. So if you look at the graph on the bottom, you see all their services, which include personal care and home health care, as well as palliative care, come towards the lower end of costs. And then on the right-hand side of that chart, you have hospitalization and inpatient rehab and some of the other services that are far more expensive. So basically, home-based care offers the same or similar services, which is preferred by consumers and families at a very reasonable cost. The other thing that is driving growth for them is the fact that in most Medicaid states, the state governments are shifting from a fee-for-service to managed care way of providing services. And that basically means that the services are more corporatized, and basically they want to make sure that care is coordinated and there is an integration of services. So that works in favor of large providers like Addus in most states. They also have opportunities to consolidate the business because it's a very fragmented industry, and they've been growing, or they've been adding growth to their organic growth over the last several years, which has added to their growth. And we believe that acquisition-driven growth can continue in the future. So once again, we like Addus's industry. Like I said, highly fragmented market with few platforms of scale. Addus is one of the leading providers in a market that has almost 18,000 licensed home care services. So there's a huge number of providers. A lot of them are subscale and are barely surviving in the current environment. What are the key growth drivers? As I said, rising costs benefit home health. So they are able to provide services at a 30% discount or cheaper than most other care providers because they're able to service their clients at home. Also, almost 40% lower cost of care compared to the traditional care settings in hospitals and nursing homes. There's a lot of white space. Like I said, only 15% of the market is captured by the largest providers. So there's a lot of opportunity for them to consolidate the market. Thirdly, aging population. People over 65 years are continuing to grow. It's the whole baby boom population that is maturing and growing, and they would rather stay in place at their home. And if they need any services, they would rather be provided at home. Also, the 85 plus population is expected to double over the next couple of decades by 2050. So, as I said, lastly, age in place. Everyone wants to, stay at home, be comfortable. 90% of adults age 65 and over hope to stay in their home and for as long as possible. So that all that works to the advantage of Addus. So I mentioned earlier that they have three different business segments. The first and the largest is personal care business segment, which accounts for almost 75% of their revenue as well as operating profit. So if you look at the history of this business segment, they've been able to grow organically by around high to mid single digits. That's come from a combination of growth in rates. So they get paid an hourly rate, and that rate is decided by the state government. But in most cases, they have been able to get a mid single digit growth in rates every year. In addition to that, they also get some volume growth, which is low single digits. So together they make up for about high single digit organic growth. Now, what we've also seen is most states have an unmet demand for these services. So basically, if someone needs personal care workers to come and help them, they need to go to the state agency that approves this through their own people who come and visit the person and make sure that they have the need for personal care. And so there's a long waiting list, and the only constraint for Addus or other service providers is the number of personal care workers. So in terms of demand, there is an existing unmet demand. Over the last 5 years, the personal care business operating margin has improved by about 460 basis points, and I have some details on that in the next chart, which has driven segment operating profit at a CAGR of about 14%. So slightly higher than the top line growth, which has been about high single digits to low double digits. Like I said, acquisitions add a few percentage points. They recently closed their largest acquisition to date. They paid 350 million for the Gentiva acquisition that closed at the end of last year, and they paid only around 6.5 times EV to EBITDA, almost a half of their own Addus's own trading multiple of around 12 times EV to EBITDA. So I believe this was a very timely and very well executed acquisition that closed late last year. And in a conference recently, management said that they are well ahead in terms of their bringing this business into their core and getting synergies from the business they acquired. Gentiva is expected to generate revenues about 280 million, which is primarily going towards their personal care business. So this adds 7 states, some of which Addus was already present, but it does give Addus exposure to Texas where they weren't present, and they come there as a leading provider. So I mentioned earlier the mid-single digit growth. I just wanted to look at some of the numbers from Illinois, which is their largest market, which accounts for over 50% of segment revenue. You look over there, since COVID, they've got about mid to high single digit increases. Usually, the increases are implemented from the January 1st of the year, and they get to know, or the state announces the increase for the following year, somewhere around the middle of the previous year. So we recently heard that they'll get about a 4% rate increase beginning from 1st of January 2026. So that kind of continues this trend of mid to low single digit and average annual rate increase that they've had in Illinois over the last 5 years. Now, I just wanted to compare that with the minimum wage, and I'm here using the example of Chicago's minimum wage. Even though Addus pays a little bit more than minimum wage to their personal care workers, but this is a good way to see the difference between how minimum wage growth is trending versus the rate increases that they are getting. So you can see clearly, roughly minimum wage increases are roughly comparable or slightly lower. And what that has done is over the last 5 years, I just compared the hourly rate that Addus gets from the state versus the minimum wage. And the spread there back in 2020 was about $8. And for next year, it's expected to be about $12. So the spread between the rate Addus gets and the minimum wage has increased by almost 50% over the last 5 years. And that's really helped them expand their margins over time. So moving on to the next segment that they have, that's hospice, which accounts for about 20% of consolidated revenue. And margins in this business are slightly higher, so it accounts for about 22% of operating profit. In the hospice segment, Addus generates revenue by providing care to patients with a life expectancy of 6 months or less. And basically, CMS, the Center for Medicare and Medicaid Services, is the payer, and they update their payment rates again on an annual basis. It does require quarterly quality reporting annually. So, one of the requirements for any service provider like Addus is to be able to track their workers and how and the patient population and show exactly where money is being spent and how long the average patient is taken care of in the hospice segment. There are a couple of caps that the CMS has implemented for Medicare hospice prospect under the Medicare hospice prospective payment system. One is the inpatient care days should be less than 20% of the total patient care days. So this is just to make sure that the patient is not kept for too long in the at home if they can, or at the sorry they want to encourage home-based care by making sure that inpatient care days is less than 20% of their total hospice patient care days. And the aggregate cap, again, is based on number of Medicare patients served. Should be, they increase their cap every year, but there is a cap based on the aggregate number of patients they are serving. This also ensures that the average patient stay is less than 6 months. Now, there are these two caps that the market is focused on, but so far, Addus has not had any issues with these caps. They are operating at levels much below either of these caps. So this has not been an issue for them so far. Now, just tracking the annual rate increases again under the Medicare hospice payment system, they get low single digits, or they have got in the last 5 years about low single digit increases. And there on the right side of that table is the aggregate cap, which is again increased by about the same amount in terms of low single digits. Um, Now, the business came under pressure during COVID due to shortage of clinical staff and also short duration of stay. Most patients didn't want to come into clinical setting, and therefore, most cases they prefer to just stay at home. Uh, Recovery took longer, and so management more recently has made some leadership changes at the end of 2024. And guiding for forward growth, they said they're expecting growth to be between 5 to 7% over the next 3 to 5 years. One of the attractive things of this business segment is home health, which is treating people that need clinical care, but they're not at the end of their life yet. That provides a good source of referrals for the hospice segment. Actually, in New Mexico, where they have both the business segments, almost a quarter of the patients coming into hospice segment come from their home health segment. So lastly, their home health segment accounts for about 6% of consolidated revenue and only about 3% of profit, because the profit here has been under pressure for the last several years. In this business, they provide skilled nursing and physical care, physical, occupational, and speech therapy on short-term, intermittent, or episodic basis. CMS pays for a national standardized 30-day period if it meets the threshold of home health visits. So they want to make sure that they are paying, CMS wants to make sure that the payments they are making is going to service people who deserve home health visits or who require home health visits from a clinical staff. The value-based purchasing model was introduced in 2020 and then expanded nationally in 2022. So for effective operators like Addus, it provides the opportunity to get a 5% incentive payment based on performance. And this is an added incentive for the market to consolidate into larger players that are able to offer more efficient and better services. So here we see, I mentioned the fact that margins in this business have been under pressure, and the reason for that is the last 3 years, the rate increases have been less than 1%. And the reason for that is that basically CMS has said that they want to maintain budget neutrality. So they have, even though the annual formulaic increase would have been in the mid-single digits, they added a factor to maintain budget neutrality that reduced the annual increases to less than 1%. But what that has done is it has already led to some pressure on patient access, especially in rural and smaller communities. And therefore, we believe that this payment pressure cannot continue in the future. And at some point, payment increases will come back to the low to mid single digits. But what this has done in the meantime is this has provided management to make accretive acquisitions at a very low multiple, because a lot of the smaller players are really struggling. And again, it has allowed the market to consolidate into the larger players. So Addus has grown this business largely through acquisitions over the last few years. I mentioned at the outset, one of the things we are very focused on is in capital allocation. We want to make sure that decisions are made that are very thoughtful and are made with a view for what the returns would be over the next 3 to 5 years. And what we've seen management do is exactly what they laid out in their presentation, which is to say that they want to make accretive acquisitions in their existing markets that helps build density and increase coverage. And they become a consolidator of choice in what is still a very fragmented market in even states that they have an existing operation. And in terms of looking for adjacent markets or services, they are one looking to expand into other states where they don't have a presence right now. Like the most recent Gentiva acquisition allowed them to enter into Texas. And the other thing that they're looking to do is expand from just the personal care services that they offer in some markets to health, home health, as well as to hospice service. So offer the three levels of care that they have. Over the last 5 years, they invested about 800 million on 11 acquisitions. This was largely funded through a combination of debt. They generate about almost $100 million in annual cash flow, of which about 10 million is invested in capex. So that leaves about 900 million annually in free cash flow. So, and therefore the 483 million that they've invested in these acquisitions has come from operating cash flow. And lastly, they did an equity raise late last year or mid of last year to raise 176 million. This was just ahead of closing the Gentiva acquisition that they did last year. And that equity issue was priced at about $108 per share, which is roughly where the stock is trading today. So one of the things we look for is, a differentiated opinion. We want to make sure that if we are investing in a stock, it's not all the good news is not already priced in. And I think at the current moment in the healthcare market as a whole, and especially for Addus, the market is really focused on some of the risk. And we believe we've talked to management and we've done a lot of work in understanding these risks. And we believe